Welcome. You're listening to another episode of AML Conversations, where we sit down with some of the brightest minds in the financial industry to explore topical matters around financial crime and compliance. We hope you enjoy this discussion, and please be sure to subscribe for more.
Hey, Rob, how you doing today?
Hey, John, doing pretty well. How are you?
Good. Hey, thanks for taking some time to talk to me today. I know we first broached this possibility of doing this back in May at the West Coast AML Forum. So I'm glad we were able to finally get a time and a schedule. So as I told you then, and we've talked about offline, one of the things that continues to interest me, and I think interests our community, our broad-based AML community, is career paths and how people make decisions regarding this world that you and I both either we've fallen into, which I did many years ago, or something that we deliberately wanted to be part of, and how that happens, especially now because we have all these different options. And so the specific option, obviously, that we're going to chat about today is the cryptocurrency world. But first of all, you work for CipherTrace, which is a MasterCard company. And I'm very interested in sort of your mission, if you will. I know that you, obviously, as MasterCard does, it works closely with traditional financial institutions and some fintechs, but part of the mission and part of your role is to advise your clients about some of the challenges in the cryptocurrency space, right?
Yeah, absolutely, John. So it's interesting, right? MasterCard, you alluded to kind of what they do and what they've done for a really long time, and CipherTrace. So CipherTrace, right, works with law enforcement, government agencies, traditional financial institutions, crypto entities, et cetera, right? So work with a number, and as a blockchain analytics firm, right, it provides tools to allow those different players to root out the illicit activity and do their different functions. So where that all comes together, and overall, MasterCard and CipherTrace share that same vision of making the whole crypto ecosystem, digital asset ecosystem, just safer in general, right? Making it safer to operate in, reducing the volume of illicit activity, reducing cybersecurity risk, reducing money laundering, terrorist financing risk, reducing fraud, things of that nature. So it really kind of, both firms come together on that.
Obviously a very recent phenomenon. I know Bitcoin's been around for maybe a decade and a half, something like that. But I know that for most of us, and you could tell by the conferences we all attend, right, that now there's obviously a separate conferences on virtual assets or digital assets, and obviously the money laundering prevention conferences have sessions on this. But you started your career with traditional banks, and then you moved to the Federal Reserve in Kansas City. While you were in those roles, I know you had some AML responsibilities. What drew you to digital assets? Was it something you raised your hand and said, I'd like to help here? Was it like some of us, you sort of got, I don't say pushed into it, but hey, we need somebody to do this. Rob, would you do it? How did you get involved into that? Because it takes a lot of education and understanding. Even if you're a tech whiz, I would imagine there's a learning curve.
Yeah, no, definitely. I would say I kind of fell into it much like I did into AML in general. So when I first started working for a bank in the accounting function, I fell into AML because of an enforcement action that the bank was going through, right? And I just happened to sit 15 feet away from the BSA AML group that needed more bodies. And so I kind of fell into it that way and learned and grew through that experience and navigated my way through the Kansas City Fed, back to another bank, and then back to the San Francisco Fed. And that's where my path crossed with this digital asset topic, and with some firms in Northern California and Southern California, and really just kind of being maybe somebody who raised their hand, or kind of a combination of being volunteered as well. Had to very quickly get up to speed to how things worked. Really, at that time, it was very much so from a BSA AML sanctions perspective, but that changed over time and became more broad to think about things like safety and soundness and consumer protection and cyber considerations and things like that.
What was the biggest challenge up front? Not necessarily for you, but in general. So one of the things, and I've talked to some other folks in the crypto space for these podcasts, and typically, not in every case, typically these companies will hire traditional compliance people once they recognize, hopefully right away, that they need assistance in that space. Some willingly, some not so much. What was your first inkling about the mindset of people in the crypto space? So, if you're coming from the Federal Reserve, obviously you have that big banner behind you, federal regulator, policy place, all that sort of stuff. Is it, yes, we want to work together with the regulators to make sure things go okay, or is it, lack of a better term, a thumbing their nose? Hey, we don't need the same regulations. We're not banks, that sort of thing. So I assume it's a mix of things. But what was your experience dealing with people that were specifically in either crypto companies or advising crypto companies?
Yeah, I would say it's definitely a mix on that. There's a lot of large crypto firms that are very vocal about the need for sound regulation and have gone as far to tried to build their internal controls to kind of fit what they think might make sense from that regard. And a lot of those folks come from traditional financial institution backgrounds, government agency and intelligence agency backgrounds, law enforcement. So you have enough of those thought processes and individuals at a lot of the major crypto firms, so that I think that thought process gets brought up and is certainly part of the conversation. But most of my interaction initially was with the financial institution that was providing services for the crypto world. So as I started to get more directly involved in conversations with the crypto entities or digital asset entities, and especially now, right, going to a conference like a West Coast AML where you have that as a topic mixed with other topics, and then the next week going to strictly a crypto conference, where there's no bank folks, there's no regulatory folks. It is a very different dynamic. One is, I'd say one camp has kind of the view of both worlds, and then one camp is just so focused on technological development and enhancement, and maybe just is hoping to continue to operate a little bit more without some clear regulations, so they can push those boundaries of innovation.
Yeah, I that would make sense. That some say we want to compete with you guys, meaning the financial sector, and others like, no, we think we're better off collaborating or cooperating. That would make a ton of sense, that there would be that separate mindsets, like lack of a better term. I think that makes sense. MasterCard has a long history, and you alluded to this at the front end, of working closely with law enforcement on a whole host of issues, and you referenced the same with CipherTrace. From a high level, how does that manifest itself? Obviously, if it's cybersecurity, I'm sure it's exchanging information on typologies, red flags, that kind of thing. But is it ongoing relationships like a lot of your traditional financial institutions have had? Do you have, you come from the Federal Reserve, do you have folks that have come to your company from law enforcement? Because that obviously is what a lot of financial institutions do. Again, high level, not trying to look for anything proprietary, but high level, how do they work together?
Yeah, you bet. So our CipherTrace group, I would say, and this is probably true for all blockchain analytics firms, right? You've got a number of them out there. A lot hire former intelligence agencies, former law enforcement. We tend to be a little bit heavier on kind of the government agency, military, and banking experience. So we kind of gravitate towards those types of folks on our team. Mix in some other with more crypto background, obviously. But that's kind of how we have a diverse set of knowledge and skills within our group, especially on the regulatory and investigative side of things, compliance function, if you will. But, how we kind of interact with law enforcement, I say that's one of the key differences I noticed in this role compared to my prior banking roles, right? Where it was more, they'd reach out and get additional information if there's a subpoena request or SAR follow-up or whatever it may be, fraud working groups, right? That was kind of its thing and continues to serve a great purpose. This is more law enforcement agencies, hey, we're going to use your tools and kind of help identify the flow of funds, and because everything's pretty transparent, right? There's some ways to disguise funds and hide funds, sources and uses, but everything's right there, right? It's kind of a little bit of a different sense compared to cash activity, right? So that's kind of the main difference, right? Is as I see the interactions with law enforcement, it's almost more like a kind of like a service provider in some ways, where some agencies utilize our tools and utilize our investigative expertise, right, to try to put the pieces together on their side so they can go out and actually catch people that are doing things illegally, right? So.
Yeah. So obviously the client base is both private and public sector. That makes a lot of sense. The issue of money laundering, specifically in the crypto space, one of the things that we hear law enforcement talk about is sometimes the concern about anonymity or close to anonymity. Give us a couple of examples, if you can, about how in crypto, how money can be laundered, how value can be laundered, and again, high level examples that you guys have seen in your work, either with the government or with your financial institution clients or partners.
Yeah, absolutely. And I would say nothing is absolute, but there's certainly, some techniques that exist in that space to try to disguise that the trail of funds, right? The source and use of funds. So you have things in the crypto space or digital asset space, depending on if you're talking about coins or tokens, but you have things like peel chain activity. So I almost look at it as like an inverted funnel account activity, where you're kind of slowly peeling off. Maybe you had 10 Bitcoin and you're slowly peeling it off and doing thousands of transactions to try to recirculate the money and move it through other wallets and other destinations, and then ultimately then looking to do that traditional funnel approach to bring it back to one place or one entity. So you have a lot of that stuff going on, right? Peel chain is a term, and I think funnel account or funnel activity still very much applies. So you've got those, and then you've got mixers and tumblers. A lot of people talk about those, where if I want to kind of wash the source of the fund and say, hey, I've got a Bitcoin and I want to send it through this mixing service, they say, okay, we'll take a 5% fee, and we will kind of disguise the origin of the funds and get it back to you in a new address, new setup that nobody knows is attributed to you, most likely an unhosted wallet or private wallet, right? And here you go. Now it's clean. You're ready to go. You've got your privacy, and that's the service they offer. So that utilizing those services, there are ways to get around that, but that's another method of kind of laundering funds and disguising the ownership of funds to get around the analytic capabilities of some of the firms. That's kind of three.
Sure.
There's a number of other things, and what I have learned is they're not too dissimilar from really all the traditional red flags that we're so used to, like using mules and structuring activities and finding institutions or entities with weak KYC and weak AML controls, right? And trying to utilize them to turn your crypto into actual cash.
Is it fair to say that we always talk in financial crime prevention that the criminals are always a couple steps ahead of the rest of us, which is an old saw, like you go to the banks because that's where the money is, sort of phrasing. Is that the case here? Because this is I think a complicated area, and my educated guess would be that some criminals are not that intelligent, especially ones doing money mules or Nigerian scams or what have you. But are you finding that they are pretty adept at using crypto, or do you guys feel that you're staying sort of on par with them? And obviously there's no metrics here,
sure,
but just in general, what's your sense of that? Because that's interesting to me, because I would imagine it's got to be as difficult to understand as it is for the layperson. But what's it like in the real world?
Yeah. So this is something that I would say I continue to learn every day, but it's really every hour here. And I was just on a call here this morning with one of our investigators, and she was talking about this in a training event, and just kind of said like, hey, ultimately there's going to be a pocket of individuals that no matter how sophisticated they are technologically, they still might do something stupid.
Right.
So when we go back to that mixer piece we were talking about before, right? They clean their Bitcoin, but they may have done something dumb along the way that, basically shows their trail. So it's very much so there's people behind the activity. There's always going to be a portion of them that, continue to kind of do that dumb stuff that make it easier to trip them up. But then there's a lot of sophisticated operations as well that are very much so out there. I know you mentioned kind of the metric piece. I wouldn't say this is exactly the direction you're going, but when I think about everything that I was taught in traditional finance about just global money laundering as a percentage of kind of global GDP, right? I just recall percentages of anywhere between 2 and 5% over the years, and crypto, at least the identified total volume, is under 1%. It's very possible that it's higher than that, right? And it could be closer to that too, or so. But generally speaking, it's easier to actually identify it, right? You don't have that huge range necessarily that you do with things that are not traceable. So that is one thing that I learned almost immediately coming into this world is, hey, as a total percentage, maybe the illicit activity is maybe not as vast as people just automatically think.
This is not an economic conversation, obviously, but as we talked offline, with what's going on in the market, and I've read various numbers, but I think the agreed numbers, at least $2 trillion in wealth have evaporated in the crypto space. And so there's articles about sort of the end of cryptocurrency. Others have speculated that it's a scam to begin with, what have you. I know neither of us, you're closer to being an expert than I am. We're not experts in this space. But what's your take about not the community, the market in general? I don't mean the stock market, but the crypto market, based on who you talk to, who you interact with, just the fact that they've lost so much value. Is this something that, for your perspective, it doesn't matter? We got to still stay focused on the challenges and the potential illegal use of crypto for our clients, but you must have some thoughts in general on where you see this a year or two down the line.
Yeah, definitely. And the interesting thing from our perspective, blockchain analytic, and then transactional activity, thinking about MasterCard, right, is what you're talking about, right, is the evaporation of market cap. Right. So 3 trillion to 1 trillion roughly. And, I think it was the first half of 2021, the World Bank said I don't know, 16 trillion in transactions for crypto. And one of our researchers just did something here in the month of May, and it was like 2.2, I want to say, roughly, for just the month of May. So, just trying to think about that, and the transactional activity is not necessarily slowing down. It might be growing in some respects, but it just leads me to think that maybe this is just something that would weed out some of the weaker players.
Right.
I mean, there's tokens and coins. There's tens of thousands of these things out there. There can't be tens of thousands of economic uses for those types of things. But I think the underlying technology is really interesting, and it could have a more viable longer term use. But I think it's just going to flush out some of the weaker players here, and that's what I hear a lot of people talking about at both traditional conferences and crypto conferences, people that are really, more economically savvy than I am. So,
going back to your old agency, what's your view on how the Fed and Treasury and others, they made a lot of public statements, not just recently, in the past, 5-6 months, maybe longer, about crypto, and obviously the Biden administration has created some task forces and all of that. Where do you see all that going? Do you see that going toward additional regulation? Additional, focus on the challenges. I mean, obviously, we've seen legislation introduced in the AML space. We've also seen stuff separate and apart from that. So just looking back at, like I said, at your old agency and the policy debate, where do you see that headed in the next couple of years?
Yeah. So I think back to probably November of 21, right? The executive order gets, I think, a lot of attention, and rightfully so, here in March. But back in November, I was looking at the federal banking agencies and seeing, right, you've got the president's working group on stable coins, you've got comments from the OCC, you've got comments from the Fed agencies on a crypto policy sprint, a lot of research, and I think there's this heavy focus right now from all the agencies to take a deep dive into the policy, into the regulation. My sense is it's almost like, hey, what traditional stuff still applies? Traditional risk management considerations, what maybe matches one for one, and then maybe what doesn't match, what's new, kind of doing a delta. That's my thought. I'm not sharing anything that's confidential or anything. That's just kind of my best guess. But the executive order was helpful. I think it just put everybody. It was almost like a project planning document in a way, right? It basically said, you do this, you get with this agency, and here's your time frame to complete these steps. So I think when we get to the end of that, which is probably, I think, the longest time frame, would put us into October or November, something like that. So I think as we get to that point, it's going to be a little bit more clear of who fits where. Once you can get kind of the SEC and the CFTC to get along a little bit. But for the most part, I feel like the federal banking agencies got into lockstep back in November and have continued to do so since then.
Rob, I'd like to get you out of here on this, go back to your career pathing. You said, and it's sort of a common example, you said with an accounting background, you ended up in BSA and then went to the Fed, and you've been different places, and obviously now you're learning about crypto. What kept you engaged in AML? For people that are listening and they've seen somebody like yourself that's gone from private sector, public, back and forth a little bit, but obviously staying within the same theme of AML, financial crime prevention, sanctions, the space that we're all in. What kept you staying there? What do you find, comfort's the wrong word, but what do you find the most intriguing, interesting, challenging about our community that keeps you involved in this?
Yeah. I think since day one, I found out very quickly that it's almost like a principle-based approach, right? You have some of your black and white legal stuff, but for the most part, there's a lot of opportunity to apply problem solving, critical thinking. Things are constantly changing, right? You alluded to it, right? The criminals are constantly trying to get 2 steps ahead. So for me, AML gives you a full view into a lot of organizations. You get to see a lot of what's going on. You see a lot of inner workings of transactions and clients and how it all fits together. And I don't know. I found it fascinating to see that, and then be a part of helping law enforcement is a big thing for me. Ultimately, knowing that a lot of the work in the AML space goes to serve that function. I would say those 2 things, the critical thinking aspect and being able to serve kind of that law enforcement centric piece. Those are what really kept me in that space.
That's great. Rob Triano, Director of Crypto Risk for CipherTrace, which is a MasterCard company. Want to sincerely thank you for taking some time today and sharing your insight. Thanks so much. Stay safe, and we'll talk soon.
Thanks, John, for having me. Really appreciate it.
Take care.
All right, you too.
Thanks for listening to another episode of AML Conversations, brought to you by AML RightSource. To make sure you're staying up to date with what's going on in the industry, be sure to subscribe wherever you listen to your podcast to get the latest episode.